Okay, let me welcome on board Narendra Solanki to talk about the fundamentals of the markets, and we've got Osha Krishnan as well joining in the charts. Osha, just want you to analyze what kind of price action do you sense now for the Nifty after the kind of huge volatility that we've seen between Sunday and yesterday, that is?
Very good afternoon. Firstly, I am expecting that market should be remain on the bullish biasness side. So I am expecting that in the coming period also there can be a decent upsurge in the market. Although it's the approach should be buy on the dips because we have already seen strong momentum in the last two trading sessions. So definitely one should wait for a breather in the markets and utilize dips to accumulate positions. Even for today also, I was having a bullish view and have shared the same also. But looking at the recent development. I am expecting 25,600, 650 to be seen as the potential strong support for Nifty, and any dips towards the zone of 650 should be utilized to buy position in Nifty on the higher end. 25,800 is being a very critical zone. So at current levels, it will be advisable to stay light on Nifty. And if Nifty sustains above 800 zone, then in the coming period, we can see 26,000 to be retested in 1 to 2 trading sessions.
Narendra, let me come to you. What's the view with regard to IT? Do you buy the dip? Do you hold on? What do you do?
Yeah, good afternoon. I
Good
think,
afternoon.
if we talk about IT sector as well, the kind of news we have seen yesterday, so definitely it's concerning. And again, it's getting a lot of headwinds for the short term. See, the problem with the sector has always been since last 4 to 6 quarters is the near-term visibility is not there, not coming, and the confidence of the market is not building up about what would happen in the immediate next 2 to 3 quarters. So that has been concerning the markets since last many quarters. And again, we have seen the news regarding the kind of work done by the new AI tool. So which again makes the market rethinks the kind of pricing model the industry would be adapting, because right now it seems like the manpower into your costing model is now going to be a part of history, and you have to reimagine the whole pricing model and how do you account for the kind of workforce you already have. So I think again the industry has to rethink, but yeah, this is going to stay, and the models have to evolve. So again, the near term next immediate 2 quarters are again cloudy, but looking at the medium to long term scene, I think the kind of deal the order books the companies are having, so they are very fairly robust. So I think it would help them in reinventing themselves and turn the tides on. But yeah, coming to the valuations, we are still below 5-year average valuations, but we are again trading higher than 10-year average valuation. So we are somewhere in the middle, but I think it's not the place wherein you can either go short and neither you can also go long for a revival, at least for the next quarter. So I think it's somewhere you sit out and see how the response of the companies comes about managing this kind of reinvention in the overall industry.
Okay, interesting. So, Narendra, what's the call on IT right now? Wait it out. Don't be in a hurry to jump in to buy this decline.
Yes, definitely. Wait and watch is the should be the correct approach. Whatever you have your positions, and instead of building new positions, I think wait and watch is the right strategy.
Okay. Talk to us, Osho, with regard to how defense is playing out. And we're starting to see a bit of pressure on a couple of names, including the likes of a HAL. What's the take with regard to some of those defense counters?
No doubt, HL has seen a very strong correction, and that's on the basically news. So I'm expecting that there can be some kind of consolidation or some kind of negative biasness in HL. But overall, on the technical fronts, it is at a very strong support level. So the zone of nearly 4,200 to 4,180 has been a bullish gap of the island reversal candle that we have seen on the daily time frame chart. So I'm expecting that one should not be in a hurry to sell off their positions in HL as of time being. But looking at the recent developments, the counter is not able to being on the higher front. So there has been consistent rejections on the higher zone of 45 to 4,600. So one should wait for 4,600 to get decisively crossover. Then only can look for buying opportunity in HL. Till that time, better to stay sidelined from this counter.
Right, okay, that's the take coming in on some of the defense plays. Today, of course, it's really about Eternal, Trent. These are the names, the beaten down ones, which are making a comeback as we speak right now. ONGC, Maruti, Max, Titan, they're all names which have held out very smartly indeed. Narendra, wanted you to analyze how you read into the Motown sales for the month gone by. Quite impressive, and clearly all that the government has been doing is now reflecting in terms of demand uptick in auto numbers. And what would you recommend buying right now at these levels?
Yeah, definitely the numbers were impressive, and we have seen that the momentum which we have seen since last 2 months has been continuing, and the efforts of the government and the cuts in the GST have really improved the sentiments overall, and the buyers have also been very forthcoming. Now, coming to the sectoral picks, I think we still favor two-wheelers in comparison with the four-wheelers. So in two-wheelers, TVS is our top picks. Now, in four-wheelers, we are positive that overall industry would be showing good numbers, but because the competition is so high, it's not very clear who would be leading because there are a lot of competition at every product bracket. So hence, the overall demand would be divided among the different products. Then after two-wheelers, we are positive on commercial vehicles. In commercial vehicles, I think Ashok Leyland is one of our top picks, and ancillaries also we are positive. So two-wheelers, commercial vehicles, ancillaries, and then comes the passenger vehicles. This is the pecking order we have in auto.
Okay. Narendra, I wonder how you're playing textiles. It's obviously the direct play on the India-US trade deal, but we've seen massive spikes in some of those counters. Let me pull up a few of them. Gokaldas Exports is up a very solid 15+% in trade today itself, but it's up 45% in the last 5 trading sessions. KPR Mills is up 10% in the last 5. Trident is up 12%. Arvind is up 24%. Indocount is up 37%. We can quickly pull those up. And Pearl Global is up 25% in the last 5 trading sessions, up 6% today. We spoke with management as well. How do you play this, Narendra, or is it too late to arrive to the party?
I think definitely textile is one of the sectors which would be benefiting most out of it directly with the FTA, and it has been one of the sectors which has also been hit by the tariffs when these were announced initially, and the kind of stocks you're talking about, they have fallen more than 50% in last 6 to 9 months. So yes, the rebound has been very sharp. I think we should wait for the fine print and then should take a call. Because right now the kind of run-up we have seen, it has run up too fast. Although we are yet to see, we are significantly below their all-time highs, which were a year back or so. But I think the kind of run-up, I think we should wait it out for the fine print to come and then may take an informed call.
Right, okay, that's the take coming in on where is it that one is seeing opportunities emerge from.
How should you play it? How are they looking on charts?
See, overall, many of the counters, as already has been discussed, they have seen a strong movement of nearly 30-40% in a week. But overall, on a technical setup, I expect KPR Mills is still on a positive terrain, having a healthy technical indication. So I'm expecting from here onwards, not very aggressive on the accumulation zone because the counter have already seen a huge surge. But technically, it is looking very positive, and I'm expecting that in the coming period, 1120, 1140 can be seen as the next potential target. So majority of the players have seen a decent traction and they have turned the technical parameters towards bullish biasness, but accumulation zone should be in a staggered manner and any dips should be considered healthy after the recent rally. So one should consider the corrections as accumulation purpose, and on the higher end, most of the counters are looking positive from short to medium term perspective.
Okay, that's some of the textile plays which are on our radar. But just looking at the market construct, it's really the usual story. IT is the drag at one end. Within the liquid pool, you've got some of the EMS plays which are now picking up further weight. Keynes, for instance, is up 6.5%. Dixon higher by 6%. PFC is charting up about 6% or so. And then Crompton, PG Electroplast, these are also names which are looking smart indeed. Look at the larger cap universe. That's where you've got an ONGC, which is holding out very well. Max Healthcare is holding out well. NTPC is looking good. Titan, Maruti, etc. as well are picking up some more weight. And Kunal, we were talking about as to how the entire PSU commodity play as well has been holding out good. NTPC, ONGC, Oil India, all these charts have begun to spurt up. Any trend that you see in place?
It's very rare to see stocks like ONGC moving up
Yeah.
5-7% on a daily basis. And I think that's been the norm for the stock in the last couple of days. Same is the case with NTPC. Maybe I think this could probably be a indication that the stocks are coming back into a breakout mode after quarters of consolidation. So I think over the last 2 or 3 quarters, or the calendar year 2025, these stocks were stuck into a range of 10% to 15% band for themselves. So for these stocks to try and come out, you would probably want that the beta of the stock increases up higher. And maybe I think that's the kind of indication what these stocks are showing up. But again, these are classical signs of breakouts for both ONGC as well as NTPC. I would believe that for traders who are looking at a time frame of 1 year plus, I think these could be very good level, even after this 5% to 10% kind of a broad up move in the last 2 or 3 weeks for both NTPC as well as ONGC.
Kunal, what about some of the EMS plays? Because you're seeing plenty of traction on those names. I know you spoke about a Keynes, but what about the likes of a Dixon, some of the early movers, as one would call it? Some of them moved on Sunday itself, and thereafter they've moved in different directions all through the week. So talk to us about those.
So, we are at a point where, Harsh, many of these EMS stocks, they are at a 30% to 40% divergence from their long-term moving average. Case in point, for example, for Keynes, the stock, the 200 DMA for the stock is at 5,750, 800 levels, and the stock currently, after this 5-6% up move, is at 3,700, which means that there is a gap of almost 2,000 points for the stock from its long-term moving averages. These are unsustainable kind of aberrations on statistical basis, because when stocks rally up 40% or 40%, 50% below their long-term moving averages, they tend to narrow down into a mean reversion phase. So even in that process, there could be at least a 500 to 1,000 pointer rally for these stocks from their previous swing lows. So I think in that case, 3,500 was the low for Keynes. I would expect 4,500, 4,700 to be a potential target for the stock before the mean reversion starts to shape up. So it's not a a recovery which could probably indicate that the worst could be out for the stock price. But even if it's a dead cat bounce, there could be a room for another 10% upside for these stocks from current levels.
Okay, that's that on the EMS plays. Of course, looking very, very smart in trade. HAL, of course, is one stock which has been down, from the word go today. That, of course, is a news-linked move, one would say. But is that weakness filtering in on or reflecting on any of the other defense names? I doubt so. Let's just bring up some of those charts and show you how the entire pack has been moving, and whether or not you are seeing any weakness. Remember, Tata Advanced Systems, L&T, Bharat Forge have been shortlisted to build the next-gen ACMA fighter jets after technical evaluation, and HAL clearly got out of the race, with the final winner is going to be chosen about 3 months from now, which is, of course, one of those advanced multi-role combat aircraft program systems. So that's why you're seeing a bit of a knee-jerk reaction come by on a HAL. But Osho, what's your sense? Do you think weakness in HAL today, and if it persists tomorrow more so, should be bought into?
At present, as I already mentioned, that HL is at a very strong support levels. The zone of 4,200, 4,180 is a historical support zone. So one should not be in a hurry to short the counter at current levels. Wait for a follow-up sell-off. If it breaches the zone of 4,150 or 4,160 on the spot levels, then it can be seen as fresh short positions in the counter, and then one can even look for selling positions from short-term perspective. But at recent levels, after the volatility that we have seen in 2 weeks, the counter is at a very strong support levels. So should not be a kind of a bearish view from here onwards.
The other space which is buzzing also today is the pre-engineered building product space. You've got some stocks within that space which are doing well for themselves. And Interarch, let's pull that one up. And EPAC Durable also, a Penar. Those are just some of the names. Narendra, positive with regard to these names, because we're seeing pressure on Okay, so 7% higher on EPAC Durable. And Pennar, I wonder what that one's doing. That one is also doing fairly well for itself, if I understand it right. It's up 1% today, but last 5 days it's up roughly 4 odd percent, 3% higher. Do you have a view on some of these names?
Yeah, definitely. We are positive on this space. If you see, even in the budget, the government has been very proactive about increasing manufacturing share as a percentage of GDP, and that requires setting up many new plants, be it manufacturing plant or be it assembling plants and whatever. So, in all these installations, there is a very critical role the PEB segment, pre-engineered building segments plays, and this has been very positive, and it's a very healthy tailwind for the sector. We currently like Interarc in this space. If you see, the latest results are very good, and the company is also guiding decent growth. The new capacity setup is also coming up, and ramping up should happen. So it will not only add new capacity, but also capacity utilization would also improve, and the company is also targeting the revenues of almost 2,000 crores, which is 20% plus growth for the next few years. So I think Interarc is one of our top pick in this segment.
Okay, that's Interact, and that's looking interesting right now in trade. In the meantime, look at an L&T, a Tata Motors passenger vehicles, Asian Paints, etc., along with, of course, Eicher. They're all holding out quite okay. But Kunal, the chart that I do want to talk about is SBI, given the kind of incessant weakness that we had in the stock up until, I think, yesterday. And do the moves after budget or the trade deal change anything in the whole debate about PSU banks versus privates?
So I think, yeah, it does, to a certain extent, because now I would believe that, the private sector banking stocks could be a lot more favored. In fact, you've seen this in the last couple of days where the likes of ICICI Bank, for example, has come back above 1400 levels. HDFC Bank from 900 levels to 950. Axis Bank has come back towards its previous highs. So these larger cap private sector banking stocks have seen a good recovery, and the pace for rally for these PSU banking names, it's stalled or maybe halted a little bit. So, when you look at the charts for SBI, PNB, Bank of Baroda, etc., these stocks have shown recovery, but then they've not managed to break past about their previous, highs which they've made a couple of weeks back for themselves. So, I think in that context, we are looking at potentially a resurgence of sort from for the private sector banking names, and maybe a tad bit of an underperformance for the PSU banking stocks. I would still believe that SBI is one of the best available stocks in the PSU banking names, and in case if the stock happens to drift a little bit lower from current levels, say till 1050, 1040 mark, that could be a point where traders could look to accumulate further.
Osho, PFC, REC, again, these are stocks which have come back to the fore on the back of that clarification that they're going to hold a board meet, at least PFC did, that they're going to hold a board meet to try and consider the restructuring which the government announced in the budget, and you look at the move on the stock, it's 5.5% higher, PFC. REC also up around 2 to 3% in trade. What's the view there?
I'm expecting a kind of a pullback in both the counters. PFC already have seen a decent surge, and today it has moved beyond the 200-day simple moving average. So I'm expecting that in the short-term period, there might be a continuation on the higher end towards the zone of 430, 435, where we have seen multiple rejection and can be seen as a multi-week resistance zone for PFC. But overall, both the counters are looking positive at present levels, and there is possibility of further momentum in the coming period. REC, I'm having a bullish bet also that one can look for accumulation at current levels. Near about 400, 412 will be the positional target for the counter, while on the lower end, 365 is a very strong support level. So I'm expecting that in the coming period, both the counters can see some kind of a strong performance coming forward.
Right, okay, understood. Another news piece that we're picking up, the government has...
On the back of numbers, of course, but give us a sense of how this one looks on charts.
Yeah, I've seen the long-term charts for Lloyd's Metal, and the stock has been a huge multi-bagger over the last 4 or 5 years. I think Lloyd's Metal was a stock which was 10 rupees or 12 rupees in 2020, moving towards almost 1500, 1600 plus mark post that. So I think it's come back towards a good corrective phase from those 1600 levels in 2024. Recent correction for the stock was around 1100 mark. It's still trading below the 200 moving average, but 3 consecutive days of price uptrend probably makes the indicators a little bit overbought.
Okay, that's the take coming in right now on Lloyd's Metal. Of course, PFC, REC, that continues to be one duo which we're tracking. And of course, they've secured a strategic 6-year contract as well with the global EV OEM. And that's why some of these names have been in focus. But 2.5 minutes left to go before we wind up for the day. Osho, given how trade has panned out today, what's it looking like? Of course, lots is going to depend, I guess, on which way globally things pan, especially with regards to, the way the IT sector may move from here. But other than that, just the Nifty charts, given that other than IT, a large faction of the market was resilient and held out.
See, overall, I am still bullish in the market and expecting that once Nifty breaches the zone of 25,800 on a decisive manner, then we can see continuation on the higher end. Today also, because of IT major, the counter has, all the benchmark index has seen some kind of restriction on the higher end, but have thoroughly maintained the higher zone. So I'm expecting going forward, one can look for bullish biasness only in the market, and 25,800 is the just mark because the OI accumulation is majority in the strikes of 25,750 and 25,800. So once those things cool off and there might be short covering in the coming period, then we may witness another 200 point of rally. So overall, one should look for buying opportunity only. But I'm waiting for some kind of further correction towards the zone of 25,650. That will be an apt zone to accumulate Nifty, and 25,800 first target followed by 26,000.
Okay, all right, Osho, Narendra, thank you so much for joining us this afternoon. We'll let you go on that note and let's begin wrapping because last few minutes of trade, as we see it, the Nifty is up just about 0.1% thereabouts. But really, the decentish move is coming from the Nifty small cap as well as the Nifty mid cap indices. Why is the Nifty 50 not responding as well? It's largely because of the drag coming in from the IT stocks. And when I'm looking at the contributions on the Nifty 50, IT is obviously the predominant negative contributor there. Infi, nearly 100 negative points, TCS over 50 negative points, HCL Tech, Tech Mahindra combined around 30 odd points. So that takes the cumulative total to nearly 180 negative points between these four counters alone. And that is what is impacting the Nifty 50 index today. That's where the pressure is coming from. The Nifty IT therefore has sulked 6% at close now. 2% higher though for Nifty oil and gas because there's gains across the board except IT and defense. I'll talk about defense in just a minute. 2% higher on oil and gas, 2% higher on energy. You also have metals 1.3% higher, auto doing well as well, 1.1% higher. The realty index is up 0.9% as well, so it's good traction across the board. The Nifty PSU bank gained over 0.5% as well in trade today. Defense is the other culprit. There is pressure on the defense index and some of the names led by HAL are the culprits for that one. Pharma index closes mildly in the red outside of these two indices as well. Broadly, that's the take. The breadth was favorable and that's the other big positive. That's of course a wrap of the day and we've closed for the day. Kunal, how's it looking today in terms of the move? And what's in store? Because we've still got Thursday and Friday to go. We're done with 4 trading days this week. It's a long week. So talk to us about what we can expect.
Not you alone.
It already looks like a Friday. It's only Wednesday. So I think on the markets, of course, it's been a good closing for the index, not just in terms of the points close, of course, but today's move is more, where market breadth starts to open up. There are days when, it's like the opening batsmen, they flurry, and then it's the middle orders which have to take, the task. This is the time where the middle order is getting set because you're looking at the mid-cap, end of the market, looking a little bit more better. The mid-cap index has come back about the 200 moving average. Market breadth is 2:1 in the favor of advances. I would believe more such days where you probably expect the market breadth to open up, even if it, comes at a cost where the index just about consolidates for the next couple of days, should be considered very positive for the index.
Okay, Kunal, thank you so much for joining us this afternoon. And viewers, we're out of time. But bringing the budget discussions on ground, ET Now is hosting the India Investment Summit in Mumbai this Friday. Thought leaders, visionaries, policymakers, investors, MSMEs and innovators all present to unravel what the Union Budget of 2026 has to say, analyze its impact, and chart the country's economic direction for the year ahead. The summit puts the spotlight on India's BFSI sector at a pivotal moment between tariffs, currency, valuations, and how the implications of the Union Budget will likely unfold, and the forthcoming financial year, of course. Tune in to ET Now, India Investment Summit. And with that, it's a goodbye on this edition of Closing Trades. Thanks so much for joining us. From all of us here, thank you.